So when I say asymmetric investments, I guess what's different from most investors, I don't mean that the stock is kind of trading somewhere to intrinsic value and it has like low downside because the valuation is very low. I usually mean extremely high upside. And as simple as it sounds, stocks can only go down 100%, but they can go up much, much more. So if I have a portfolio where, let's say, each stock would have a 50% chance of going to zero or 10xing, obviously, if I don't get extremely unlucky or just only have one pick, my risk reward is pretty damn good.
Welcome everyone, this is Mariusz Konieczny. I'm chatting with Daniel Koss. He's connecting to us from Switzerland. We're going to talk AI, technology companies. So Daniel, thank you very much for joining me.
Thanks for having me.
Okay, so you like to invest in AI, you like to invest in technology companies. So walk me through your your investment strategy.
My investment strategy is quite simple. I think it almost sounds cringe to say it, but basically I'm looking for very asymmetrical investment opportunities. I try to look for companies that, I guess I have to say that I come from the startup world. So in the startup world, the way that most people think about investing is it's totally okay if something can go to zero. It's actually normal. And that is okay because those investments that work out can 10, 50, 100x. So when I say asymmetric investments, I guess what's different from most investors, I don't mean that the stock is kind of trading somewhere to intrinsic value and it has like low downside because the valuation is very low. I usually mean extremely high upside. And as simple as it sounds, stocks can only go down 100%, but they can go up much, much more. So if I have a portfolio where, let's say, each stock would have a 50% chance of going to zero or 10xing, obviously, if I don't get extremely unlucky or just only have one pick, my risk reward is pretty damn good. So, of course, the challenge
So talk to me about more about the venture world or the startup world.
Mm-hmm.
This is where you're from. So you had a job in it. You started up companies. Talk to me about that.
Yeah, I've never really had a proper job, to be honest, because I dropped out of high school when I was 11 years old. I was, or officially at 13. I've been a founder my entire life. So I was a pro gamer first. I started playing competitively at 11, and then at 13 I dropped out of high school.
What did you play? What sport did you play?
Esports. So a couple different ones.
Okay.
So there was one game particularly where I was rank 1 out of 60 million players multiple times. And that was called Tribal Wars. It's probably not very known in the US. It was very, very famous in the German region, Germany, Austria, Switzerland. Like most people my age have, most nerds, I would say, have definitely played it. But then I was also playing other stuff competitively. At one point I was rank 4 in the world on Minecraft PvP, on the biggest Minecraft PvP server. So really, I played games competitively, a lot of different games. And then essentially one day, my dad bullied me into investing. He told me that games are just games, and if I would actually be good at playing a real-time strategy game, I would go into the real economy, start a real business, and make proper investments where there's like real money on the line and where you compete against the best, brightest, smartest people in the world. And after like 15 years, that's kind of did become where I ended up. But between that, I was always starting my own startups. I had a digital marketing agency, I had my own Minecraft server, I started my own B2B SaaS company. I was a CPO and head of marketing at a functional food company. Did a lot of angel tickets, like really a long story. I don't want to go into all the details because I would bore you.
No, but this is fantastic because it kind of shapes the way you think, shapes your philosophy, shapes your risk profile, right? Because like when you said about it's okay for some stocks to go down, I was thinking this is the guy I want to talk to.
Mm-hmm.
Because this is so right, because like I see so many people being so afraid of touching these companies that maybe don't have revenues today, but they have something promising. They're so afraid to touch it because yes, it might go to zero. But like you said, if you have a portfolio of these, the ones that succeed, they pay for all of your sins.
Yeah, exactly. And I think the only rule there is to not get too greedy and put everything in the one stock that you love the most, because if obviously, just stating the obvious, you can't be long-term rich if you're short-term dead. So if you have all your if you only own one stock and you're a genius and you 10x and you 10x and you 10x and you 10x, you only need to go to zero once, right? Especially if you're trading options, for example. I also do that. But by trading, it just means like I buy leaps and I hold. That's it. I don't day trade. But a lot of the things I hold can go to zero literally as a function of the instrument that I'm using. So I'm always kind of in panic mode. And the way I chill out is because I need very, very, very few winners to pay for a lot of losers, plus some massive gains on top. And it's also not gambling, of course, right? I come from competitive gaming, which is very, very taxing on your entire physical nervous system. Like in pro gaming, the best people in the world, they play 10, 12, 14 hours a day to train. And like this is very taxing on your nervous system. Like you're constantly under pressure. And when these people lose, usually they start crying and they realize like there's so much pressure. And I think that gives me kind of an edge in like handling the pressure. But the beauty is that in investing in stocks, you have time, you have hours, you have weeks, you have days, months, etc., where you can research those stocks. You can look, is the management aligned? Are insiders buying or selling? Is the company, like, does the business model itself make sense? Are they just losing money right now, or are they losing money forever because the business model sucks? Do they have moats? And I think also being a founder myself, I've started multiple companies. I had one company that was profitable and did really well. I had one company that I could exit and made a shit ton of money. And I had one company that failed. So I've had all three outcomes. I had a complete failure where me and all my investors lost all our money. I had one outcome where everybody that just multiplied their money by a lot, and had a mediocre business that was just profitable. And so that gave me a lot of learnings, and these were also in different industries about what actually is a moat. Because I believe people that have not been founders or have not been C-suite of a startup under high pressure, they don't understand how important moats are, or what even a moat is. It sounds so abstract. Like when Warren Buffett says you need to have a moat, and then you read some McKinsey reports about what is a moat, it's very abstract. But if you are in an actual startup and you're fighting against a competitor with a strong moat, you realize it's an unfair advantage and you cannot win. It's like a 1 meter guy fighting a 3 meter guy. Like you're going to lose like 100 out of 100 fights, right? And that's how I like to in investing also, to pick companies where I feel like this company has already won, but it's not priced accordingly.
Okay, so in the investing, talk about some of the companies that you won as an investor, and maybe some of the companies that didn't go so well.
I will start one that didn't go so well. Over the last 2 years, I would say the biggest two failures were Tesla. I had a lot of Tesla stock when Elon started insulting Trump, essentially calling him a pedophile and stuff like that via Twitter. That was obviously not good for my Tesla stock. I then sold out of my Tesla shares very, very quickly, partially because I wanted to find better risk-reward companies, partially because I wanted to have more fully dedicated CEOs that are more aligned and full-time working on those companies. But needless to say, that, I mean, at that time, Tesla was like 30-40% of my portfolio. Was like a very, very high allocation, and that definitely hurt. I don't remember how much it fell, but it fell by a lot. The second loss was, maybe Google was a big loss, where I invested. I was pretty sure that Google would be one of the biggest AI winners, but I went into Google too early. Basically, when Google was still kind of going down because of the AI is going to replace Google narrative, I already went into Google because I thought there will be a reversal, which we're seeing right now, right? Google has I think if you bought it in the lows, it's already more than doubled at this market cap, which is crazy, right? But basically, I did a bad timing, and then I thought, okay, realize it's too early. Took a 10% loss and sold my Google shares again. It's not a huge drawdown, but these are like my two worst right now over the last 2 years.
And what about some of your wins?
Yeah, biggest wins. I've had many companies where I doubled or tripled my money. Oklo was one of the biggest. Do you know about Oklo? Basically,
the new modular nuclear reactors.
Yeah, exactly. Basically, they're building small modular nuclear reactors, or they're going to build from 2030 plus. And I think it's one of the most hated companies on X right now. People are dumping on Oklo and saying the company sucks, it's a fraud, it doesn't work, it has no revenue. They hate it for every possible reason. The reason why I got into it very early, I think I started buying Oklo at, I do not know when exactly I bought, to be honest. It was very early, beginning of the year or last year. But basically, I did some more research, and I thought this is the stock that would attract most investors because of the positioning in the White House. People who did some digging realized that I think Sam Altman is the biggest investor. I do believe that Peter Thiel is actually the second biggest investor. The former board member of Oklo, former president of the board, I believe, is now the Secretary of Energy in the White House. There are some clear connections. Basically, there were very clear connections that were essentially saying this is a company that's run by the White House, and just being a bit cynical there and thinking the White House will pump its own bags, basically. And also, I think you have to think about Oklo as a bit of a call option on OpenAI, Sam Altman, just one day saying, hey guys, you know what? We're going to deploy 100 gigawatts of nuclear powered capacity over the next decade, and our preferred partner will be Oklo, which means like 50 billion revenue for Oklo, and like it really is like a call option. Does the valuation make sense based on its fundamentals right now and the revenue? Of course not. There is no revenue. But that's just kind of how I think. And then at some point, of course, I sell, because even if I think this company could have a huge future, at some point it was trading at like $180 per share, which is basically literally assuming that they would build more nuclear reactors than they physically can over 5 years. And so at some point it was getting too ridiculous, and that's kind of where I sold my Oklo shares again, where the fundamentals, like the company was priced higher than in the best version of what's physically possible. So I also sell when something gets too crazy. Don't just hold forever and hope it will triple forever.
Okay. Let's talk about Nebius Group. You know a lot about the company, and actually I made a video about Nebius, and I want to take your take on it because I missed it. But here's what I don't like about Nebius, and I want to get your take on it. So Nebius is pretty much, building data centers, and they buy the GPUs from NVIDIA, and they're pretty much renting out the computing power. And what I don't like about it is that of the depreciation that, these GPUs have a, few years lifespan. And then after that, they have to be updated, they have to be replaced, and NVIDIA always comes up with new models. So to me, it's like, why would I want to buy something that's almost like renting out clothing that depreciates? So tell me about how you see that.
Yeah, I get it. So basically, the Michael Burry short case against all the companies that built this is like, okay, so you're essentially saying these assets will depreciate over 4 years. I think you're lying. I think it's 2 to maximum 3 years. I think you have no moat, you're replaceable, and you will basically be bag holders. So the short version is I don't think that's actually what Nebius does. I don't think their business is actually renting GPUs. And I don't think they're a data center builder. I do think they have a world-class team. I think they have one of the best, if not the best team in the entire world to build data centers and the entire AI infrastructure. Literally every single step in the physical infrastructure supply chain can be done by Nebius in-house. They work with external partners, and obviously give away some of the margins, because that way they can grow 3, 4, 5 times faster, because they can build capacity faster. I think the reality of a company like Nebius is that they are just far superior to other companies. So I think literally on building the infrastructure itself, they can build more, faster, cheaper, and then they get far superior margins. I do think in the long term, they'll be able to charge 2 to 3 times the amount of dollars per megawatt compared to other companies. I absolutely agree with you. I think a lot of the data center providers are horrible businesses, and there's a reason why I don't own any other company in that space other than Nebius, because I don't think Nebius is actually active in that space. They just build the data centers because that allows them to then have the capacity and to build the full hyperscaler cloud experience, which a majority of that is actually software. So the revenue, the customers that use that infrastructure, they grow insanely fast. Like many of them grow like 100% quarter over quarter. And if you're their infrastructure supplier, of course you grow with them. Then the next thing is that if in the traditional cloud space, if you look at AWS, Azure, Google, etc., a majority of the profit is not actually them renting CPUs. It's the value, it's the software and the value-added services on top of it. So let's say 2/3 of the profits actually come from that. And so the thesis in Nebius is that basically the profit will, I think Nebius would be totally fine if they just like break even on the infra business. I do think they can get like a 10-20% profit margin on that, but a vast majority of their profit will actually come from selling the software, value-added services on top of it, which is the product that they launched only recently, which is Ether, Token Factory. These are the products that they are still in the process of building and making better. I think right now they've reached a critical milestone where these products will start to become a relevant part of the quarterly earnings, and you can see how their margin will just expand. And also the demand is so high that a lot of people are like skeptical, like, oh, it's a commodity, it's price sensitive, prices will go down. The reality is that they're actually increasing their prices right now. People are saying like, oh, if demand is so much higher than supply, why aren't you increasing the prices? The short answer is they are. They are increasing their prices so they're growing from 1 billion ARR by end of this year to 7 to 9 billion by end of next year. And the founder, Arkady, who has like 10 to 15% stake in the company, has a history. So he's highly aligned with us shareholders, and he has a history of reaching his guidance at Yandex for a decade. Even in years where the guidance had to be revised, he still always hit the middle or upper part or exceeded guidance for like a decade straight with like 0 misses. So that's a guy that's not bullshitting. When he says we're going to 7x ARR, he's not like, his history says he reaches what he promises. Then also, Arkady and the other co-founder, Roman, which is his chief product officer, basically, they literally studied theoretical and applied mathematics. They're literally studied mathematicians. You can trust them to know the numbers. They, like the analysts that cover the space, that say that, oh, depreciation will be higher, they don't have shit on those two founders. These are actually geniuses. Arkady has been like the founder of like 5, 6, 7 unicorn companies. With AV Ride, they had like super advanced autonomous cars in 2015. I'm trying to say, like, whatever he does, he crushes it. He's also the co-founder of like Getir, which is like the Uber of Turkey. This is a guy that starts multi-billion-dollar businesses as like a side quest. And then Toloka and AV Ride and Triple 10 and ClickHouse, of course, many multi-billion-dollar companies were all started by their teams in Yandex. Like, so what I'm trying to say is this is a company that on every single level, if you look at them, they're not just another builder of data centers. They're like way better, orders of magnitude better in every single step of the value chain than all their competitors. And another thing is that many of these companies right now, they have like crazy multi-gigawatt capacity promises that they're making to shareholders. This team at Nebius has done that for a decade. Like, they were literally the biggest customer of NVIDIA outside of China and the US for a decade. They have built infrastructure on hyperscaler level for themselves at Yandex, because like they were building their own infra. And there's also a reason why I think they are literally getting like 30% more dollars per megawatt when they provide infrastructure for companies like Microsoft or Meta compared to other pure players on the infra side. So they're literally better at the infrastructure side than anyone else. Plus they have the software stack that's now coming on top of it. And yeah, I think I don't think you missed it. I think there's a very, very, very long way to go here. And I think this is one of the generational companies that we'll have in AI on the infrastructure level. I think the future is very bright.
So correct me if I'm wrong. So they're using the GPUs, which is the hardware side, to attract clients so that they can sell them a whole package of software services. So going back to the moat that you were talking about, they're creating a moat, right? Switching costs, have the clients have their entire business ingrained with Nebius, which makes them like clients for life.
Yeah, totally. I think the switching costs of bare metal offerings are essentially not there. If you're just renting GPUs from somebody, the only stickiness of that revenue is because many of these deals, if they're multi-billion dollars, they will of course be signed for 3, 4, 5 years. But that's not real stickiness, right? That's just you're contracting a client. They're just staying because they contractually have to. I like businesses that are so good that customers either can't, or even better, don't even want to consider switching. And once you're Nebius and your engineers realize that they get onboarded by a world-class engineer who like a world-class data scientist who makes the time to value so short that like basically the same day I can run stuff, and within a week I got it completely figured out, and within a month I'm seeing like insane value. Versus on Amazon, I have to wait for somebody actually answering to my support ticket. And then it's some person who honestly barely speaks my language and has no idea what I'm talking about. And then I need to escalate 5 times internally to talk to somebody who actually technically gets my issue. Like the old hyperscalers, Google, Amazon, they cannot keep up with a fast growing startup like Cursor, which is like 10x in year over year. They want to have a beautiful UI. They want to have a great user experience. They want to have high reliability. They want to have a highly competent, reliable contact person. They want to have a cheap price. You need to have a world-class product in there. And right now, Nebius is delivering that. And that's why they are crushing benchmark after benchmark after benchmark on reliability, speed, cost. Like they're just winning in every single dimension. You know what I mean? It's like saying Magnus Carlsen and you or me are both like to play chess. Yeah, that's true. But Magnus will win against me and everybody else that I know simultaneously while blindfolded, while drunk. There's a difference. But yeah, sure, we both play chess.
Yeah. Yeah, very interesting. Okay, my final question is: Do you have any final thoughts that you could leave my audience about the way you invest, some of the technology companies, or anything you would like to share?
Yeah, I guess a lot of people that invest probably have this mindset that if you're a retail investor, it's impossible to outperform the market. So you should just buy the index. You should just buy the Nasdaq or the MSCI World, or you should just buy an index and do nothing. I'm a fan of the do nothing part, but I do think stock picking absolutely works. If you research a company like Nebius, for example, there will always be moments where buying is insanely attractive. And there are many, many other companies out there where you can just be on X, and you don't even have to be the smartest person on a specific stock. You can literally just identify the smartest minds from millions of users who cover a specific stock, read their full research, and just say, you know what? That sounds about right. And if you pick those stocks, you will literally outperform the market by a huge margin. Obviously, you need to be very careful to only trust people who have a good track record, who have a solid analysis, and who make sense, who are convincing if they talk to you, and not fall for every second pump and dump scheme. But there are people out there that have very strong track records, and they have very elaborate posts on specific names. And there are people that have been obsessing for many, many years over the same stock. And these people know more about these stocks than anyone else. And that information is out there completely for free, and you can just use it. So I believe that stock picking is great, and more people should actually pick stocks versus just being happy with the index that barely outperforms inflation. If you do a true adjustment, the return of the index is not that high.
All right. Well, thank you for doing this interview.
Thanks.